Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording Saturday morning, August 22nd. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great.
We had another quiet week in the markets, huh?
Another quiet week. And where was that?
Yeah, it
Right?
was it was quiet if you weren't watching commodities, bonds, the dollar, crude, the S&P, or the NQs.
Right, right. So quiet except everywhere. Right?
That's right. All right, exactly.
Mm.
Let's first off thank everybody for supporting the channel, for
Mhm.
subscribing, for hitting likes, for giving us hypes, for the comments. Please continue to do that as we want to grow the channel. And when you all do that and participate like that, it really encourages us to keep cranking out the content. So thanks again for that. And it was a good week, Barry. The grains remained bullish. They traded up and followed the levels that we
Mhm.
said to watch, the important levels. Sugar traded higher, hit an important spot, which we'll talk about. Cotton moved up again. That's just a monster. Also hit an important spot. Gold rallied from our support, continuing the pattern that we've been tracking of higher lows and, bullish pattern. Silver also was running. Outside of commodities, we had bonds selling off again. You've been talking about that for years, and it continues to happen. The dollar lost your key level of support, Barry, at 99.50,
Yep, yep,
and failing to recover that, we opened the door to further drops there.
yep. Mhm.
And lastly, crude held 81 like a champ and rallied strongly, and crude is poised to potentially make a big move higher. So we'll have to see.
Yeah. Well, that's a pretty clean scorecard.
Oh yeah,
Yeah, yeah.
absolutely.
Hey, how about that? You shared that limerick with me earlier, and it was pretty damn good. I don't think we should wait on that. Would you
Okay,
mind
let's
sharing that now? Get
no,
that out
let's
of the
do it.
way?
Let's jump in and do
All
it.
right,
It's
let's hear it.
we've had some requests over Twitter for the limerick, so let's make
Mhm.
sure we keep that streak going. The bulls tried to push through the gate, but resistance advised them to wait. While commodities flew, the dollar broke too, as the footprints had signaled their fate.
There you go. There you go. I mean,
These
that
things,
pretty much sums up the week.
yeah. I mean, it was
Yeah.
so they were having fun with these limericks, but they do. We try and build in the truth to them, so you could sort of see what happened in a funny, sort of entertaining way. Yeah,
Sure.
that brings us to this week's theme, Barry, and it's sort of a question and a statement. Surprised? Not if you
Hmm.
followed the footprints.
That's right.
The strength in commodities and the weakness in stocks and bonds may have surprised a lot of people, but shouldn't have surprised our esteemed audience. We've been showing you all the footprints of market moving money all year long. Money's moving into commodities. They were bottoming earlier in the year, and now they're starting to get momentum. Those footprints were sitting on support levels in grains, in sugar, in cotton, in gold, in silver, and in crude. And they were all, visible at the gates when the S&P and the Nasdaq couldn't break through them. We talked about, they're banging on the gates last week, and if they don't break through, things are going to happen. Well, the bonds kept selling, and the dollar lost 99 and a half. And so we're getting the signals from the levels, and that's kind of the key thing with our methodology is you identify the critical levels through the squares, and then when price moves above or below them, you know what to do, right? Because the
Hmm.
odds the odds tell you what's most likely to happen there. So it doesn't mean that we're always right. Of course, nobody's always right in the market, but these are probabilities, not promises, and that's the main thing we want people to understand is that we're trying to give you an idea of when price does a certain thing in relation to important levels, it flips the odds, of what's going to come next. So Barry, now the question is whether not whether last week's calls worked. The question is whether these moves have room to continue or whether we are arriving at the next sort of important juncture where,
Yeah.
we have to look at what, the price and time probabilities are.
There's
You know,
always that. Yeah.
yeah, I mean, can the commodities hold these breakouts and follow through? Can crude build above 81 support?
Hmm.
Is the dollar going to recover? I mean, the
Nope.
best thing for us to do is to jump into the charts, right? And see.
Absolutely. Yeah, yeah.
So,
And plus we have a lot of, don't we have a lot of news coming up next? I mean, it's going to be, it was a pack, it's a packed month, man. Next week we have Fed chair, we have Jackson Hole, right? We have
right.
payrolls, we
That's
got
always big.
second quarter GDP. We got lot of stuff coming up.
Durable
PCE,
goods,
yeah, yeah.
PCE. Yeah, I
Cool.
mean, there's a lot of stuff coming. So, oh,
All right.
and to add something else, we've got Nvidia earnings after Wednesday's close.
Boy, here we go.
So it won't be boring. We promised you it wasn't going to be a boring summer, and it's not a boring summer.
Not at all.
Let's go to the charts. Let's see
Let's
what they're
take a
they're
look.
telling us.
Let's start with the SPX.
Hmm.
Last week we talked about the 78.18. That was the key. We were pushing right up against it. And, I kind of held my ground. I said, look, this is all great, might be all bullish. Cycles might look blown, but look, we got to take the level out. Otherwise, nothing's happening.
Hmm.
So that's basically my stance, right? Levels are the final, sort of the final decider, if you want to put it that way.
Yeah.
Timing will give us places to watch, but price is what everybody has to agree on. If not, there's another timing point coming down the pike. So there's no shortage of time. Anyway, so 78.18 was the price last week. We said, look, if we can't settle above that, we can probably look for weakness. And I left the sort of the support levels that I had drawn up the week before. And well, sure enough, here's the cash market. So we just kind of gapped and dropped all the way down almost to the zone that I marked out to be support. And well,
If one quick thing, Barry, if you're new to the channel, I know a lot of you are probably saying there's no way that that was written beforehand. Go check the last week or the weeks before. The square, the 360 line, full square has been there, since you set this square, what,
month
early
ago,
this
yeah,
year or
yeah, yeah.
last year actually. Um, and the box he drew, I remember he drew it in. He said, let's put this box in here where, price could go. And I mean,
Mhm.
look at those levels. Look at both levels.
Yeah, not bad. So the upper boundary is 76.25, lower is 75.82. Obviously, the reason here is, there's a big support range from a number of different ways. So, all right, so the market did that. We reversed, came down. Obviously, the question now is, what happens next? What happens next is, look, last week when we left, I pointed out to this inside bar and I told you guys, look, if we take out the low, we're going to go. If you take out to the upside, well, obviously we're going to clear 78.18 and settle on top, and then we can take our business, get to 8,000, whatnot. But that's why would that happen? That would happen because all these cycles got blown out, right? If the cycles get
Hmm.
blown out, then what happens is there are bigger cycles that are working, and it's like the tide; it'll just lift it into the next phase. But the reason we use price levels is because if it's going to get lifted into the next phase, obviously it has to cross these markers, right? So I look at these square levels, literally red lines in the sand. These are red lines for real. So we couldn't do it, which means the old cycle still has some traction. Now I just want to spend a minute on the old cycle because we spent so much time on it, last couple of weeks, just to bring it to a closure. So all this, this whole high business started when we pulled into a big cycle high back in end of May, and we got a correction, not just in price, but we also got it in time. We ran for about 45 days, and fine, right? We can correct for 45 days. So we were looking for either the 45 to be a low or 45 to be a high. Okay. And we kind of pulled in, but we didn't make a new low. We already had a low. We were making higher lows. And then we pulled up into the 45, plus or minus one day. I would say we pulled up into that 45. And then we talked about it. We said, look, it's 78.18, there's resistance. And we pulled up right next to it. And I was saying, like, this is good enough for government business, at least it's good
Hmm.
enough for our work. And if that holds, fine, we're gonna go back and down and correct it if we get the correction in price. Now, what happened after that, the week after that was, we ran up and made a new high. The day we made the new high, the next day was an inside bar. So to me, what do we have here? We have a potential for a crazy false break,
Yep.
which we talk about all the time, right? So I mean, here's the last false break that we had before the big break we got, back
Hmm.
in January, right? So here's the high came in. Well, actually, the high number of high cycles expired in this last 2 3 month period, but here's the false break, and then boom, down from there. So here was a high, and then false break, and then down. Favorite trick for the S&P. So I just want to cover that. Now we're back on track, right? We're in sync. Earlier we were like kind of fishing for like, okay, where is it gonna expire? Is it gonna be in here? Is it gonna be a new high? Is it gonna blow through it and hook up to another cycle? So now I think for me it cleared it up, said, okay, we had the high came in, false break. Okay, fine. Now we're down. The thing is, we had a 1 day pullback, and it was super weak. 1 day, and even that was anemic. And then we dropped hard into Thursday and Friday. We kind of had another inside bar,
Another inside day. Yep.
right? So I think if we take out now Friday, well, we'll get into this when we look at the 30-minute, how support came in and whatnot. But this is starting about 26.75. 76.25, it's support going all the way down to 75.82. So we're going to start to get into some support here. Sorry, support. So let's watch for that. But if we take out Thursday's low, then we can expect, especially if 76.25 goes, we can expect a test of 75.82, right?
Hmm.
So this area is where I'm looking for like the first drop to sort of hold before we get some kind of a counter trend. All right, so that's my take on the cash, and that's my take for next week. And if we get a counter trend, let's say come Monday without going any lower, fine. Then we're looking for the next uh,
Next
lower
high to
high.
sell, right?
Yeah, yeah, well, yeah, lower high.
Yep.
And next week, given all the stuff we did, the earnings and this and that, Jackson Hole and everything else thrown in, it could be volatile. So it's possible that we, shake and rattle here and then, settle to the downside. Let's see what happens. If you guys want to follow us on X, we post every day, and the 30-minute charts I post for the S&P brackets the day pretty well, and it gets you on the right side early on, close to the open, and
If
then
you're day trading and you're not using that chart, you're doing yourself a disservice.
yeah, at least check it out, right?
Yep.
See if it'll help.
I mean, because the levels are tremendous.
Right. If you want good Nasdaq levels, then Ben's posting them on an hourly chart. So
Hmm.
that's there. And the link is in the description. All right. I think that covered it, right? That's the basic
That's it.
idea. I think we
Yep.
can just kind of move
We
from
got a high
there.
in place, and now we got to see, how
Yeah, and we
how
kind of know
far
where
it's
the
going to
where
go.
the support should come in. So
Exactly. Yep.
that's that. Here's a quick look at the front month, September,
I mean, look
and
at that perfect support.
yeah, you can't beat that.
Almost too perfect, right?
A little too perfect. That's right. So 78.50, I said, look, it all looks very bullish, but we really need to. If you guys listen to the last 2 weeks, it's pretty cool. If you want to listen to the last 2 weeks of comments, because nobody knows what's going to happen, right? So we have to hold on to like two or three things we really trust, and these square lines are one. And I said, well, if we take out the 78.850, that's a big deal.
Hmm.
If we do that, we're going to end up at 8,000, somewhere near that, no question. Especially if we settle about that, obviously. Anyway, we turned down. So of course, we talked about that. Structural support. I drew the line. I said, look, if it's not there, next spot's going to be 50% level. 76.66 I picked out. How about that?
Nice.
We made all that fun about 77 and 77 and all that, right? Remember?
Right. Right.
So, yeah, well, we can laugh last. So we got the 50% square move. That's normal. Now we can look for some kind of a counter trend. Seems like 77.50 would be the likely resistance if we
Hmm.
counter trend. But anywhere in there, it lower high and a reversal is what we're really looking for. Is a big high in place? Well, I don't know about a big high, but we definitely have a high in place that has the potential to get into a big high. But we'll have to, it's the first week down, so we'll need some little bit more proof to see what's happening, right?
Hmm.
And but so far, it's a very normal, good, solid, healthy correction, and we stopped exactly where we should be. went a little bit below the old highs, which means, it's not as strong as a bull as we think. Bull's a little bit tired battling it up here all these days. So next week, watch 76.66. If we slip there, well, then 75.75 is within range, right? And if we really crash and burn, we have 74.84. And to the upside, 77.50 for the front month. And this is the chart I have. This is the chart I have from the COVID lows. And here you can see how the structural part is pretty damn solid on this continuation chart. So the 76.20 support is going to be the key here. So if you guys just want to have another number that's with a let's say a good reputation, use 76.20, and because it lines up with the structural support and it's a pretty damn good long-term level. So
That's key.
unless what's that, Ben?
That's a key spot.
It's a very important spot, and if we don't take that out, I would say, then we're going to rattle around here and maybe move higher. But if we take this out by any means, and then we can't recover quite, then I think that's definitely some kind of a warning of
the high becomes more significant. Yep.
Yeah. Then we have bigger things to deal with here. Here's that shorter cycle coming off of April low, and that's where we got the 7.
There's your 77.
Right. And it couldn't hold above it. I drew out that box and I said, look, man, unless we can settle above that, I'm not trusting this. And if we do settle above it, guess what? We can go hit 8,000, maybe 8,000 plus. We have room to run if we can settle above, right? And like I said, the inside bar, I remember talking about it exactly at this chart. I think if we take out the low of the inside bar, we're going to go. There we go. Trap door is open. Aren't we always early with these themes? We talked about the trap door and all. You know what I mean? We're always like 2 weeks early.
Yeah. Yep.
But everything ends up happening, right? Just like
Sure.
we talked about. The bulls are banging on the
gates last week. Yeah.
And the bulls got pushed right back into the pen.
Yeah, they
all right.
did.
All right. So, okay. So this is the cash chart, SPX. 75.77 is sort of the big support level we want to watch coming off the April cycle low. So keep an eye on that. And obviously, if we can settle above this 77 area, well, we're back on track to do some damage upstairs. So let's see what happens. All right, take a quick look at the Dow futures. Well, that 54,000 level didn't quite hold. That was the whole thing, the line in the sand there was the 54,100. We couldn't do it, and you can see how cleanly we started lining up below that and started losing it, right? One day counter trend and back down again. Inside bar on Friday. It looks like we're correcting, that's a pretty healthy correction for the Dow as anxious as it was to get up there. And so let's see how we do here. I don't have a whole lot to add to this, except that 51,800 is one hell of an important level, and you guys should know that. Draw that in there, and we'll see. For anything really, huge, that's the level to take out. Otherwise, this should be, I would say, just like a normal correction. But let's see what kind of damage gets done here, right? Let's take a quick look at the Nasdaq because I've drawn too many boxes here to just let it go. For one
But look at the boxes catching the action.
Hey, how about that, eh? How about that 30,200?
Nice.
Nobody's getting past that line.
Nope.
So, all right. So we were pushing up against that last week, and I said, look, if we can't get through there, we can expect some weakness. And we didn't get through there, and we got some weakness. And this box actually was the resistance, right? This was where I said, coming back up, if we're weak enough, and the ideal sweet spot would be to stop in here somewhere
and roll over. Yeah.
And roll over. So if this cycle was hitting, but no, we went higher, sure enough. So 30,200, and we came back, and now the key thing to watch here, we're below 29,461, but right on the top of the box that I just kind of drew up. So I would say going into next week, this 29,461 is the level you guys want to watch. If we settle above that, great. Look for that counter trend we talked about. If we just slip below Thursday's low, and then we have a lot more to go. So this is not necessarily support. Well, it could be because we had a lot of trading being done. There's a lot of value being built in here over months. Uh, Obviously, if it slips through, we're looking at, that's another sign. That would be a
Mm-hmm.
sign of weakness. So that's that. And yeah, in here, and to be back on track again, we need to get about 30,200. So I would say that's the way to handle that. Now let's take a look at the weeklies and the 30-minute. Here's a weekly SPX. We ran up. We kind of blew through. Weeklies do this sometimes. The highs. Of course, I can find a square here if I just not so lazy not to move the chart. But the
Right.
square, if I move the square, I'm sure there's one lining up. But I
Mm-hmm.
like to keep the same. It's easy for you guys to just drop lines and just go with the commentary. So I don't try to change the squares all the time. But when we do analysis, of course, we check all the different lows, highs and
Mm-hmm.
lows. And so getting back to the SPX, you pushed up against the three-quarter level, went almost up to the 7/8, which is one of my favorite levels, and we kind of stalled at the 7/8 and rolled over. So this is the first, really the down week after the high. Not a whole lot to holler about, right? But
Mm-hmm.
7,600 you want to watch. We have some structural support there. So 7,600 to 7,480 becomes, it could be two steps forward, one step back kind of price action if given all of this. But if we hold above 7,600, it could be, business as usual. We'll see. I've been a little bit conditioned with that, all this, sort of out of cycle moves like this false break and these things coming in. So let's just watch it for a week and see what happens,
Mm-hmm.
especially a week with all these different things coming in. All right,
Mm-hmm.
let's take a look at the ES. This is the continuation weekly. And
Mm-hmm.
we talked about the 7730. If we can hold above that, okay, fine, we'll go ahead and take care of business. But we were watching all the other squares to see if there's confirmation, right? We kind of want confirmation with sort of a consensus from the different highs and lows. And here, if we held about 7730, okay, fine, we got something. But we slipped below it. So now, obviously, next week it's easy. If we can't get above 7730 or can't settle above it, then we can expect more weakness. And if we get below 7626, then we could actually go back and test 7368 or somewhere in there. We'll work that out. But for now, consider the weekly being in a weak position below 7730. Here's another weekly, say ES chart. And again, you can see we hit on this square, we hit it exactly at the three quarters,
Mm-hmm.
and we're coming back to our 7604 here. So we'll see. We have a lot of watching to do next week. Russell handled it, I would say, the most elegantly, right? With the most kind of traction showing. So we got below 3041. That was the whole thing. We got below 3041, and if we get much below that, remember we draw. See, no, I didn't draw it here. So 3041 is the level to watch on the Russell. This is the Russell 2000. This is a weekly chart. If we take out last week's low, we're going to get a whole lot of weakness in a hurry. It has a lot of room to run, meaning from the full square to the 50% level, which is
Mm-hmm.
2823. That's a lot of room to run. So let's see. It'd be interesting to see if the Russell gives it up slowly or as fast as, let's say, the Nasdaq or the S&P.
Nice false break at the high too.
Yeah. Yeah. Let's take a look at the 30-minute from last week. It was a good week, would you say?
Mm-hmm.
We uh we ran the full square, full half square. So come Sunday, Monday, we remember we left off, I guess, with 7834 being the big deal. If we can get above that, fine, we can go higher. If we can't get above that, well, then, we have a lower prices to look for. And we were looking at different levels to get through. And well, we couldn't get through 7834. We started falling and getting weaker, selling off. Came down to 7744, slipped through that. You can see a quick test here, a retest. We went back down again, and back all the way down to midnight, midnight on the 18th, and rallied. We couldn't quite get above 7744, right? You can see the test here. These numbers aren't a joke, right? You can see how Look at that. This wasn't just anywhere random. This is exactly at 77.44
Mhm.
and just gave it up. Gave it up all the way down to 76.56. All week I was talking about, look, if we lose 77.44, the major support is down at 76.56, which is no great call. It's just what happens. So anyway, we came down to 76.56. And that's support, obviously that's a support level. So Friday we talked about, hey, that looks like support. And if we can hold above 76.82, we can probably get some kind of a counter trend. And we held above, didn't quite get a counter trend. It was a kind of a sort of a weak,
Chop fest.
yeah, it could chop yeah, it was chop consolidation above 76.82 versus below. So, it's possible we try to run up ABCD or something and test 77.44 again. But if we don't, guys, if we get below 76.82 Sunday and then, start pressing again 76.56, if we lose that and we can't regain 76.56, then we're in trouble and we can start losing levels. And this updates every day. So if you guys want to keep up, follow us on X. So that's my take on the 30-minute. So that wraps up all the indices. Let me jump to, you want to add anything, Ben, or we're good?
No, it's good. Those are
Okay.
good levels.
It's not that complicated this week, right?
No,
We know
nope.
what's happening here. All right, bonds, guys, ever since, I don't want to act like a broken clock. It's really not, because we talk about all the swings. Last swing up was into the ABCD. Then we came, then we're looking for support at the 50%. We lose the 50%, we go down. And I've been telling you guys, if we lose that, we're going to get down to 108. And well, we got to 108 last week and we had a bounce. And guess what? The bounce couldn't quite get through the 50% level. And I'll tell you what, if we can't get through 111, bonds are going to be weaker. If we get through 108, weaker yet. And eventually, if we sort of settle, get comfortable below 108, we can expect 105 to be tapped at some point. And that would bring this ABCD into fruition right there. That we
Mm-hmm.
drew up back in 2025 or somewhere, right?
Mm-hmm.
Yeah.
Mm-hmm.
So that's my take on bonds. Let's take a look at the crude. We're having some chart issues, so I'm going to do all the dailies first, and then I'll finish up with the weeklies, if it's okay with you guys, so you can keep up with the change here. Crude, we talked about 81, 80, what's that, between 79.50 and 83. 81 is the 50% level. If we can hold above that, I always say, it's kind of warmed up, cranked up. We can run to 91. And looks like we're running to 91 because we
Yeah.
definitely left, train definitely left 81, right? We're moving up. So let's see where it can go. Looks like there's an ABCD working, probably getting up into there. Let's see. Actually, that's a Gartley, isn't it? So,
Yeah. And if you do the bigger ABCD,
oh
it's
boy,
higher still.
you trying to spook people there? Yeah.
Well,
So,
it looks like, we could be doing a third wave off that low.
right, this one, right? A, B,
Yeah.
C. Yeah, that could
Yeah.
get up to 100. Yeah.
Around
So
$100.
yeah, and this little one can get us up to 91, and that's the idea. And what we do at 91 depends if we can get above or not, right? So we
Hmm.
could have a little bit of a pullback and then take care of business. But for now, it did what we wanted. We held above 73.50, got above 81. Now we're heading to 91. Everything is cool.
Gold had a hell of a week.
Gold had a great week. And you guys, we talked about this 4,000 level saying, look, it looks like pretty good support. And we talked about this 41.90 though. Before that, we were talking about 41.90 saying, look, you know, whatever happens, we have to get through that, sort of the bull to be out of the pen, right? And then before we broke out, we were talking about, look, if we get through here, we're going to go.
And look at the bar they used to get out.
Yeah. Well, when there's a stampede, that's what it looks like.
It was a
So,
crowbar.
yeah, it was huge. We had a huge bar up. And, as you know, in commodities, we get a big bar. There's definitely follow through, a little
Hmm.
bit of a rest and follow through again. We got right up into this 47.50 level, which is a full square. So now, look, that's a 50% move, 50% of the square. Now I would expect gold to rest a little bit,
Sure.
47.50
Hmm.
and pull back, maybe test 45, 40, whatnot. That's where we do that. If we don't, we jump above that and rest, or jump above that, look, there's something big happening, and that's a canary, I would
For
say,
sure.
right? Because here we could have easily done a false break and gone, I drew that out like, hey, we could do that and then run up, but instead we ran up hard. So it's a big difference. All right.
Silver
Silver
got into
again
the act.
got into the act. Perfect, perfect.
Look at that test back at the half
Yeah,
square.
perfect. If you guys are trading, I mean, this if you had 62.50 on the line drawn in, it came there, you had a reversal, your systems gave a buy, boom, you're in. So now 72 is the level for resistance, and maybe 67, you guys can look for some support. If we can hold above 67, silver is very, very strong.
Hmm.
And obviously 62.50 is done. So it looks like we're going to go up and test 72. So metals had a little break, right? And back on track. Copper took the break, right? Came all the way down to 635, pretty close to the trend line, no problem. We saw the 50%. We looked for the correction, nice ABCD correction.
Yep.
Now we're going to go back up and test,
Ready to go.
ready to go. And this ready to go looks like it's a real go, because we
Mhm.
did this, came back, and this is a lot of back and forward thing here before we run. If we run now, we can run pretty hard. So I would say $7 copper, yes, and possibly 730, 750. So all that is
Mhm.
in the cards, but because we're settling above 635, right? So the next thing is to settle above 682, then we're in pretty good shape. Let me jump into the dollar while I can, Eric, before the thing crashes. Okay. So dollar last week, 99.50. We talked about, well, for the first time, I was pretty negative on the dollar, right? I was like,
Hmm.
hey, we
You
can't
said if
hold
we
this.
lose 99.50, it's going down.
We're going down, and we went down. And so that's that. And looks like 98 is the next level of support. 99.50 is resistance. And I'll leave good enough alone. And I know it's hard as we can believe, hard as I can't believe this. We're, we're above the 50% level, and we're kind of holding above. So I think long as we're above 1642, expect sort of this correction to last. This might be the last hurrah.
Mm.
So, you know, get what you can. 1790 is the big resistance level. And
Mhm.
below 1642 means the party is probably over. We're done with
Mhm.
the push up. But that looks like we got a little bit more push level, a little bit more to go to the upside. So there's that.
Bitcoin had a week.
Bitcoin had a hell of a week,
Oh,
right?
look at that circle. That's a nice circle you got there.
It was there last week, and I said, I thought it'll hit the circle and take off. But son of a bitch, always it goes a little bit lower,
A little
it
bit
has to
extra.
screw up your perfect art. So,
Right.
and what really happened was I should have pinned it. I mean, there's a way to set this up. I should have set it to this low here
I
instead of
see.
these three, and that
Uh-huh.
would have shaven off these a little bit, and that would have
It's
given.
still nice.
Well, no, it worked, right? And
Yeah.
why it worked was I had this GAN line drawn in here, two GAN lines, right? This long one
Hmm.
and this one. And I told you guys, look, if it has to hold one of these, and I gave you guys the level here. I said, look, above the 63,900 base, roughly 63,900, we could get some traction. That's why that's why that line came in, and that we can get some traction. And I said, long as the GAN line holds, we could probably go. So anyway, my thinking was that we hit the circle, we take off, but I'm not disappointed. That's okay.
No, it's still nice.
It's acceptable because we had a level.
Yep.
Levels are the key here, and more importantly, got through this 69,000, 70,000 level. We blew through
Hmm.
that because after that day, next day followed through, broke the downtrend line. Well, now what we have to deal with is 81,300 level
Resistance. Yep.
resistance. So you guys, if you made it here, I don't know if Bitcoin traders actually take profit, so I don't know what to say.
Yeah.
Um, so 81,300 is
Hmm.
the level you want to watch for resistance. And because that's where we had this last high. Remember, we called out this high. This came in
Hmm.
pretty much at the same level. So let's see how we do. But that's resistance now. If you got the ride, now you know. Well, do what you have to do.
Hmm.
That's that. All right, let me cover the weeklies. Okay, let's take a quick look at all the weeklies. So we got to 108. You can see 106.27. So, 107 is really the next weekly level. And you can see 110 has held it for the last 3 weeks. Bonds are in trouble, obviously, right? At
Mm.
114, we got reversal here. That was a big tell. Well, reversal here was a big tell. But after that, it's just been down, 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 right? So 107 is the level here. If 108 goes, as in the daily, and after that, we have a lot of fun things to look forward to all around. So that's it for bonds. You want to add anything there, Ben?
No, just follow the trend. Watch
Yeah,
the
yeah,
levels, follow the trend. You don't have to get fancy there.
yep. And don't think about all the things that happen when the rates go higher. You want to sleep at night.
Right.
All right. So speaking of rates higher, so we have so on the weekly, look, $78 held, and the week before we were held nicely above it. So obviously that's positive. And this week, and just last week, we ran up uh, pretty well. So I would say, so looking at the weekly, long as we're above 78, it pushes to the upside and looks like we broke the trend line. That's on the downtrend line here. We're just about to break, if not broke it already.
Hmm.
So yeah, weekly looks pretty good. Looks like the correction is over. Take a look at gold weekly. We have, well, beautiful. Well, it's pretty much the same setup, right, as the daily. We
Look at
had
the
the low.
low of the past week
Yeah, right. Exactly, right.
on the full square.
Yep. So 43.91 was the level we were waiting for it to break. So the week before we broke above it, sat on. So this is the case, right? Break above, sat on top. Break above, sat on top.
Mm.
Retested, and bam. So 48.15 is the resistance and the target for gold on the weekly chart, and 43.91 is support for gold on the weekly chart. Looking at the silver chart, we have 66 is the support 50% level, and we moved above it. So I think on any correction, long as we can hold above 66, silver is in pretty good shape. Copper 650, 630 was the daily level, so 650 on the weekly. You can see how 690 is the top full square for the weekly chart on copper, and well, looks like we're about to go tap it. The way gold is going and the way silver is going, I can't see how copper can't go up and test $7
Hmm.
copper,
Hmm.
Just seems like it's in the works. Weekly dollar, well, now you know why I was saying those impossible words last week, which was so hard to say.
Hmm.
But
Yeah.
it is what it is, right? This was already too much, right? If we were going, we should have stopped in here somewhere.
Hmm.
And we didn't. And I think that was like the tell. And then here, okay, fine, give it an extension. Of course, we had this trend line here. I mean, this would have been the place. If that goes, now we're probably down to 97, 98. We're going to go back and test these before we get
Hmm.
going. Hopefully, we'll make a higher low. That'll keep things in check because we have, since the big low came in, we did make higher highs. And if we can make a higher low here, we're in pretty good shape. So,
And a weaker dollar is good news for commodities.
well, there we go. It's
Hmm.
well, we have a full load today, right?
Oh my
Commodities.
God. Yeah. They're
And you
all
guys,
flying.
yeah. And if you guys trade any of that, you should watch it. Otherwise, even if not, I think you should watch it just to see what's happening with
Because if you're
well,
not aware, you don't realize the inflation that's coming.
that's right. That's right. Yep. All right. Your weekly euro, 1654. We pushed above it. So obviously, if we can settle above that for the next couple of weeks at least, looks like euro can push and hang up there, hanging up here. And if we take out last week's low, then the party's over. So I would track it that way. That's all I have. We're done with the euro, covered everything.
Nice.
Let me put it back to you. You're going to look at a little bit long term on the Nasdaq, which is always important,
Yep.
and all the commodities. Let's go for it. Well, Ben, I know a couple of people commented about that 30,050 level, 48 level up there, if we can hold above or not. And once you slip below, that was the slip. It's like a banana peel.
It was
Right?
huge. It was huge,
Yeah.
and it was huge because you can see the battles that have happened at this area in the past, and we could only stay up there a couple days and then lost it. And what does this do? It gives us that lower high, right? We have the
Mhm.
high, we had the low, and now we have a lower high in place. So until this gets taken out, we're at risk of waterfall type declines here. And the next important level, like this week, the key level to watch is 29,333. And
Mhm.
again, just like 30,050 up here, look at all the time we spent here fighting. It was
Yeah.
support on the way down, and then on a bounce up, it was resistance, and then we got above it, and now we're teetering on it again.
Right.
So this week, daily basis, 29,333 is key. Watch it.
Mhm.
It'll give you a big clue as to what's going on. As long as we're below 30,050, we're on a weak footing, and you have to be wary of, this is either going to be an ABCD, which would still be pretty, take us down to here, or it's a bigger wave three, which could really get things rolling on the downside. So this was pivotal this week when we lost that. Now, 29,333 is the spot to watch. Let's take a look at the weekly. We've talked about this level up here. Remember, this is from the COVID lows. This is set to the COVID lows here. So 29,800 was key. We've been crisscrossing it for 3 weeks, but look what we did, Barry, here this week. That's an outside reversal.
Yeah. And everybody has to notice that.
Right. It's an outside reversal and at a lower high.
Mhm.
So let's watch and see if we get some acceleration on the downside here this week. Um, we're going to start, short of a gap up, we're going to start below the full square here. So we could conceivably have, a first bar since, early summer where we're stuck under here. And that again could kick in momentum to the downside, really bring on some selling. So we got to watch that. And here's the monthly. The monthly is from the .com lows. So remember, these are the daily, weekly, and monthly are all coming off of different lows, but they're giving us, important numbers that are sort of repeating. Here on a monthly basis, it's 29,662. So within, 100, 200 points of the weekly coming off the COVID lows. So that area is key. We have, a week and a half left of this month. Let's see if we print below here, then we have the potential to have a full bar stuck under after, battling up here and crisscrossing for 4 months. So all in all, the table is tilting towards the bears now. And it's simply because price has lost, important levels. So this week we're going to watch 29,333 to see if we can hold it or we lose it. I also wanted to show the calendar day because this is from the 2022 lows, which kind of
Mhm.
kicked off this whole leg.
Right.
And look at the key number here, Barry, 29,331.
And look at the close. So,
Yeah, right there. And so you can see why it was support here, it was resistance here, it was support all in here, it was resistance here. So that 29,330, 333 area is really, really the critical level to watch this week. We get stuck below it, we're gonna see aggressive selling come in. If we can stay on top of it, we can either chop around or maybe if the bulls are really frisky, we can actually bounce. So that's the key level to watch. Anything you want to add on the bigger picture stuff here?
no, we're good. We're good. I think indices, we got it. We got the
All right.
levels. Mhm.
Let's go to commodities. We got a lot to cover, so I'm going to go fast, but I want to show you key levels and the developments that are happening here. The grains all had a good week. The gaps here are from the contract switchover. We switched over to December. So, but the key thing is we're above this 678 key level now. If we can stay above that area, we're going to push up hopefully to the top of the square here at 785. Right now, 714, which was the highs in July. is the first spot. Get on top of that, then it's 785. Here's your weekly. 681 was key here, closed well above that. That means this week we could clear it. And if you look left, you can see it's a pretty important spot. It's the spot where much higher prices become probable as we sit on top of it. So let's watch 681 this week. If we can keep the low at 681 or higher, that'll clear it and open up the full square or the half square here at 825. So we cleared a good, very important spot for wheat this week. Here's your monthly, and the monthly stretching out. This is what you want to see, right? Pushing higher. Got the bottom. Had the test here on the pullback. That was in June, and then we reversed and we're going again.
Mm-hmm. Looks
That's
good. Looks
bull
good.
market type action, right?
Yep.
Anything you want? Any comments you got on wheat?
No, we're good. Go
Okay.
right through them.
Yep.
You got this.
So here's corn.
Yeah, look at this.
Very strong. I mean, even
Hmm.
before the contract switch over, right? Look, we made a new high here. We talked about this reversal, how important it was. And here's a perfect example of getting above, staying
Check back.
above,
Yep. Hmm.
right? Stayed above that full square, and now we're launching. So corn looks very, very good, very
Hmm.
strong. Here's your weekly in
And you caught
corn.
all this back in June. May, June is when you were talking about turn
Absolutely.
coming in.
Yeah, you could sort of see it, the way the price action. And again, it's just looking at watching it on a 4 hour or a shorter time frame, saying, are we getting higher highs and higher lows? And then you can see how you started capturing levels, and it's like climbing the stairs. And once it starts doing it, then it wants to get to the top. Let's look at the weekly. Here's your weekly. We're coming into 517 half square, which has been important. That was the January highs. And, it was on the way down. It was a kind of a support level here in the past. So this 517, watch it this week. Let's see if we can get above that. I mean, unless we gap over it, the best we'll do is crisscross, but that's the start, right? First, you start crisscrossing it and then you capture it and go. Let's look at the monthly. Looks like we're going to close above this full square for the month of August. If we do that, it opens up higher prices. And again, look at this is sort of the demarcation line, right? For big moves.
Yeah.
This
Yeah.
was the whole thing. Remember when we were tracking
We
this?
said
We
it
said,
last week. Exact
yeah,
same thing.
yeah. Remember we said this was like 6 months or 6 years of going sideways. And
Hmm.
then we broke out of that. We had that huge move. And so now we're, if you could call this a sideways move for the last 2, 3 years.
Yeah.
And now we're going. So things are firing in the commodity land. Anything you want to add here on corn?
No, we're good.
All right, let's go to beans.
Corn's popping.
Yep. Here's beans, and beans has approached this important area, right,
It's
multiple times,
about to blast, right?
and it's about to blast. Yep. It's getting ready to clear here. 1216 on the downside. If we stay above that, we clear this square, which, we haven't been able to do any of these times. We did it for a couple of days here and then gave it up. So let's see if we can clear that. If we do, then it's beans in the teens, right? 50% of the squares, 13. So beans is starting to go. Here's the visual on the weekly. See how this commodity builds this kind of structure multiple times?
Yep.
It creates these patterns where people get bored and then it breaks out and then goes. And we're on the verge of a potential breakout here. And you can
Hmm.
see 1283 is pretty important for really getting prices going. If we clear that, then we're looking at potential all-time highs in beans. Let's look at the monthly. There's your monthly,
Hmm.
just progressing nicely.
Yep.
1275 is the key next month. Let's see if we can get above that, get a close above it this month, and then we can potentially have a full bar above it. And then that gives beans in the teens a really high probability of happening. So in grains, everything looks good. Treat it like it's bull markets because it is bull markets. Buy pullbacks into support. That's the main thing. Ride the bull.
Mm-hmm.
Anything else you want to add on the grains?
No, we're good.
All right, let's go to the next one, which are the softs. And the softs are interesting because, we've been on sugar and cotton for a while, and we were telling you, hey, cocoa, coffee, just wait. They were triangulating, grinding. It looks like we got a completion of this up move, not a full completion, but this leg in sugar and cotton this week, and cocoa and coffee look ready to go. So let's take a look and you'll see why. So sugar, we were talking about this for months when we started doing these higher lows, and we got the takeoff, late July, early August, came up just short of the full square at 1838, but we did square out here. We did a 72 by 90 from this April low. So 72 in price, 90 in time. That's a good square. So wouldn't be surprised. And then we had a little reversal bar on Friday. Wouldn't be surprised if we correct. I mean, we could come all the way down here to 16 and it's still bullish. It would just be checking that big breakout that we had here, this breakout bar. Um, so I'm gonna step aside, watch, and look for another entry, on this pullback. It could end up we just correct in time and we go chop around, go sideways in this area, which again would be super bullish. I don't think the up move is over. I just think this leg looks like we completed. Let's take a look at the weekly, and you can get a view of how the weekly is shaping up and why it looks like we may correct. Look at that hit. Nice hit on the full square, huh?
Perfect.
Yep. And you can see this has been an area where there's been battles in the past. So if we pause here a little bit, back and fill, even as I said, pull back to this 16 area, it would still be bullish. But this is just a sign that, okay, maybe this leg is done. Discretion is the better part of valor in this spot. And then here's your monthly. Huge monthly bar.
Ugh.
Just a beautiful move this past month into resistance. So again,
It
a
looks like a
pause
real
here.
start though, right?
Yeah,
Mm.
yeah, yeah. Yep. It's a good leg up. And I think it's been good to us. We step aside, we watch and see how the correction plays out. Is it a month? Is it 6 weeks? Is it 3 weeks? Let's see. And then if it sets up bullish, we'll revisit this again. Anything you want to add on sugar?
We're good. We're good. We're all set.
Yep. Let's go to cotton. So cotton, we said when we saw this formation happening here a few weeks ago, we said, hey, this looks like it's going to go make a new high. We did make a new high, but look what we also did. Looks like we got a little false break potential here. Now we
Yep.
did an inside bar on Friday. So this is Barry's great technique. Watch the high and the low, whichever one gets taken out. That's probably the direction. But you can see we hit this 3/8 of the square, 89.41. And when you see the weekly, monthly, you'll see why I'm a little cautious on this short term. Just like sugar, I don't think the party's over. I just think this leg is over, and we have to see what comes next. Let's look at the weekly, and you'll see the perspective. The weekly actually looks pretty good because we cleared that full square. Let's watch this week. Can we sit on top of this? And do we go sideways here for a little bit? I mean, because look at all this resistance, Barry, that these old highs.
Yeah. Yeah.
There's a lot here. So stepping aside, I think makes sense. Here's your monthly. The monthly is the one that really gives you the view. I thought it was the weekly, but the monthly. I mean, we're banging on the full square. If we get on top, sit on top of that, then we're really going. Then it's one of these spikes coming, right?
Hmm.
But for now, we're in a spot where sellers have been prevalent in the past. I'm willing to take some profit and step aside and see how and if we get a correction here. Anything you want to add on cotton?
No, we're good.
All right, so let's look at the two softs that I think money is coming into, maybe out of sugar, maybe out of cotton, or out of other markets. Coco, we've been talking about for a while. We tracked this low coming in, we rode these waves up, and then we got into this triangle, and the triangle has been going on for month and a half now. And last week we got some signs that I'd been looking for, which were one, we wanted to see if we could clear 5,700. We got it, and we're getting a series of higher lows, right? As this thing's creeping up, it's starting to really, like, if I watch the price action during the day, you see they sell it off, it comes right back. They sell it off, it comes right back. They sell it off. They're having trouble keeping it down.
Yeah,
And
that's me on the other side, Ben. It's like,
I wouldn't be
getting my chocolate.
right. I wouldn't be surprised if we broke out this week. And
Yeah.
if we do, and what I did is I went back and I looked, just looked, how long was this correction? It's about the exact same time as this correction. And
Mm.
look at the same structure, right? Low, lower high, higher low,
Triangle.
higher high, right?
Mhm.
Triangle, and then go. And I think just Spidey sense is telling me that this may go this week. So I'll be up at 4 a.m. on Monday morning to watch this open to see what happens here. When we do
Okay,
break
good.
out, I mean the
Mhm.
target's up in here, 7,800 to 8,000,
Mhm.
and you'll see why. Let me show you the weekly, monthly. Here's your weekly. Look at where we're sitting last week, right?
Yeah.
All on top of that half square. And so here's the target. We did from here to here, we did a square and a quarter. If we go a square and a quarter from here, Barry, it's right up here, 8,000, 8,200
Mhm.
in that area.
Because we
And
get
that
that
would,
68.95 area. What do you think of that? What do you make of that?
yeah, that's going to have to blast through there because, right, look at, you have all this
Mhm.
resistance that's going to be there.
Oh, you're
But
saying the triangle would have enough coil in there to blast off?
yeah, I
Yeah,
mean,
right,
I
right.
mean, let's
Mhm.
assume that what I was looking at is if this is the halfway mark, right, this triangle after the initial push up, we got another like square and a quarter, so we'll get up in here somewhere, like 8,200, 8,300.
Right.
So
Very
uh,
good.
it's setting up. Let's see the monthly. Monthly close above 5,900 would be big.
Yeah. Yep.
And that's what we're kind of looking at. And here, I think this 8,200 is possible.
Man, all these prices breaking out to the upside. This
It's
is,
crazy, right?
yeah, it's
And it's all these different commodities. It's wheat, it's corn, it's soybeans, sugar and cotton have already had a move. Cocoa,
mhm.
coffee, gold, silver, copper, crude. I mean, the whole commodity complex is rolling. The only one I was looking at nat gas, I was like, I figured, oh, in my review of that's going to show it's ready. It's not quite ready yet. Not
Mhm.
quite ready. It's still trying to bottom. Now let's take a look at the last one that we're going to talk about, which is coffee. Similar kind of pattern. Big move off the bottom, and now we've been triangulating. I mean, look at how perfect this triangle is, these
Yeah.
spikes. It's like somebody's purposely doing this, right?
It's
Creating
like
this
somebody's really
pattern.
focused.
Yeah. Yep.
Yeah.
And then when I looked at, other patterns that this has done in the past, I mean, here's an example, right? We came up, made this high, triangulated here, flat bottom, like it's a descending triangle, and then bam, took off. See that here? This pattern
Hmm.
right here,
Yep.
same exact formation. So we've had the move up, triangle, break. And now let's see what happens this week. But 335 is the key number here. We break through 335, we're going. Coffee could be back at, again, if this is the halfway point, which is one square, it could be back at the highs around 425. That's
Yep.
coffee. I don't feel it's as imminent as the cocoa, but it's one to watch because it's coiling up. It's coiling up and it likes to coil up and go, as you can see multiple times here.
Hmm.
And on the way
Hmm.
down too, coils up and goes. Let's look at the weekly. Big triangle on the weekly. 331 is the 50% of the square. We get a weekly close over that, then we're going. Lastly, let's look at the monthly, 332. You see how they're all in that similar spot? You got
Yeah.
332 on the monthly, 331 on the weekly, and on the daily, 335. And these are
Hmm.
all set at different spots, right? It's not like I'm putting them in the same spot here. So again, I don't think it's as eminent as coffee, but I mean as cocoa. But what we know with these triangles is they break when you least expect it. So
Yeah.
keep an eye on it if you're interested in it, and definitely if you have not, start putting your eyes on commodities because the money's coming there, and it is signaling that we're going to have. There's just no way we're not going to have higher inflation if all these things, if all these charts are bullish, the prices of these things are higher. I mean, the last one I want to talk about, what you covered, was crude. Crude looks good. Again, the breakout higher there looks like it could be imminent, and if it is, crude will be at 97 to 100 in a flash,
Hmm.
and that may just be the start. So the message from the markets is, pay attention to commodities. Bond bonds are weak, meaning rates are going higher. And that could also be a reflection of this inflation that these commodities going higher is going to bring, to the global economy. So
Right.
it is an exciting time because the only problem is there's so many things to trade. You got to focus and you got to pick the ones where you have the edge and ones where you have the good setup. You don't have to force anything in this market. There's so many opportunities right now.
Yep.
Anything else you want to add, Barry? I think the message from the markets is definitely commodities are looking good.
Yeah, they're looking good, and we've been talking about this trend and trying to catch the corners, and we have been. So let's just move along with it. See
That's
what
it. Ride the
happens.
wave. Ride the
Right the
wave.
wave. Yeah, yeah.
So everybody have a great weekend. Rest up, and we'll talk to you next week.
Good job, Ben. And we'll yeah. Thanks for all the comments. You guys hit the likes if you like our work. If you got this far, you probably like it. So
Yeah.
give us some likes and comments, and we'll see you guys next week. Have a great week, everybody.
Take care,
Bye-bye.
everybody. Bye
Ciao.
bye.